If you are a senior living in the United States, or if you help manage finances for an older family member, this update from USA Benefits Reports is extremely important. Over the past few days, new announcements and clarifications have created a lot of confusion around stimulus checks, IRS actions, and how these changes may affect Social Security, SSI, SSDI, and retirement income. Many people are hearing the number $2,700 and wondering what it really means, who qualifies, and when money could arrive today. We are going to slow everything down, explain the situation step by step, and make sure you clearly understand what is real, what actions matter, and how to protect your benefits. Let's start with the most important point. The $2,700 amount being discussed is not a single brand new stimulus check automatically going to everyone. Instead, it refers to a combination of payments, adjustments, and refunds that some seniors may receive depending on their situation. This includes delayed tax credits, IRS corrections, underpaid benefits, and certain one-time adjustments that are now being processed. For some people, these amounts can add up to around $2,700, while for others the amount may be smaller or may not apply at all. Understanding where this number comes from is critical, so you do not fall for misinformation or false promises. One major source of these payments involves IRS reviews of past tax filings over the last year. The IRS has been correcting errors related to stimulus, credits, recovery, rebate credits, and other refundable credits that were missed or miscalculated on earlier tax returns. Many seniors either did not file taxes because their income was low or filed returns that did not properly reflect their eligibility for these credits. As the IRS completes these reviews, they are issuing payments automatically in many cases without requiring seniors to take new action. These payments can range from a few hundred to over $2,000 depending on what was missed. Another part of the $2,700 discussion comes from Social Security benefit adjustments, when Social Security reviews records and finds underpayments caused by delayed updates, earnings corrections, or benefit recalculations. They issue retroactive payments. These are not bonuses or stimulus checks, but money that should have been paid earlier for seniors living on fixed incomes. Receiving a lump sum like this can feel like a stimulus, even though it is technically a correction. In some cases, these retroactive payments alone can exceed $1,000. Now let's talk about the IRS order that many people are asking about. The IRS has issued internal directives to speed up the processing of delayed refunds and corrections, especially for older Americans and low-income filers. This does not mean the IRS is ordering a new stimulus program. What it does mean is that existing backlogs are finally being cleared for seniors who have been waiting months or even years for corrections. This is very significant. The IRS has acknowledged that delays caused financial hardship, and they are now prioritizing these cases. It is also important to understand how this connects to Social Security, SSI, and SSDI. Receiving a tax refund or correction from the IRS does not count as earned income for Social Security purposes. This means it generally does not reduce your monthly Social Security check for SSI recipients. The rules are more sensitive, but in most cases, one-time tax refunds are not counted as income in the month received. However, if the money is saved and not spent within a certain period, it could count as a resource. Later, this is why planning matters. Many seniors are also hearing rumors that these payments will stop Social Security or trigger audits that is not accurate, legitimate IRS-issued payments. Do not cancel benefits. The key risk comes from scams. Unfortunately, whenever large dollar amounts are mentioned, scammers move fast. Seniors are being targeted with calls, emails, and messages claiming to help unlock the $2,700 payment. The truth is simple. If you are eligible, the IRS or Social Security will process it automatically or through official mail. No one should ask you to pay a fee. Provide bank details over the phone or click unknown links. Let's talk about timing, because this is where many people feel anxious. These payments are not being sent on a single national date. Instead, they are being issued in waves. IRS corrections are being processed throughout the current tax cycle, with many payments going out weekly. Some people may receive direct deposits, while others will receive paper checks. Social Security retroactive payments follow a different schedule and are issued after case reviews are completed. This means two neighbors can hear the same news but receive money at very different times. Another area causing confusion is the connection between retirement income and tax filing. Even if you normally do not file taxes, you may still receive IRS corrections if the agency already has enough information on record. However, in some cases, seniors who did not file for multiple years may need to submit a simple return to trigger a review. This does not mean you owe money often. It is done only to release funds owed to you. This is something that should be done carefully, ideally with trusted help. It is also worth mentioning that some states are issuing their own relief payments, tax rebates, or senior assistance checks. These are separate from federal payments and vary widely by state. When people hear about $2,700, they sometimes combine federal and state payments in their minds. This can lead to confusion. Always separate federal IRS actions from state-level programs when evaluating your situation. As we move forward, the most important thing for seniors is awareness, not panic. Check your mail. Carefully review official IRS notices. If you receive them, make sure your Social Security information is up to date. If you use direct deposit, confirm that your banking information has not changed. Small administrative errors can delay payments, but they can usually be fixed in the next part. We will go deeper into exact timelines, who is most likely to qualify for higher amounts, how to avoid benefit problems, and what practical steps seniors can take right now to stay protected and informed. Now that we have explained where the $2,700 figure comes from and why it is being discussed, let's focus on what seniors need to know going forward. This part is about clarity, protection, and smart decision-making, especially for those living on fixed incomes who cannot afford surprises. First, let's talk about who is most likely to see larger payments. Seniors who qualify for refundable tax credits from previous years are among the top group. This includes individuals who were eligible for stimulus-related credits but did not receive the full amount at the time. Many older adults were confused during earlier stimulus programs or believed they were not eligible because they did not file taxes, as the IRS corrects. These records payments are finally being released. Another group includes Social Security recipients who had delays or errors in benefit calculations. This can happen when earnings records were updated late, when benefits were recalculated after retirement, or when survivors' benefits were adjusted. These retroactive payments are not new money, but owed money for seniors who have been waiting. Receiving a lump sum can be life-changing, helping cover medical bills, housing costs, or debts. It is also important to discuss exact dates in a realistic way. There is no single national payment date for everyone. IRS correction payments are being issued on a rolling basis. Some seniors may already see deposits, while others may wait several weeks or longer. Social Security retroactive payments depend on individual case reviews. If you were recently notified of a correction, the payment often follows within weeks, but timelines vary. If you are worried about missing something, the safest step is to review official mail. Carefully, IRS letters may look intimidating, but they usually explain what is happening. Social Security notices outline benefit changes and payment details. Ignoring these letters can delay payments or cause misunderstandings if something is unclear. Seek help from a trusted source rather than guessing. Now let's talk about taxes and spending one time. IRS payments are generally not taxable income if they are refunds or credits. Social Security retroactive payments may have tax implications depending on your total income for the year. This does not mean you will automatically owe money, but it is something to be aware of. Planning ahead can prevent surprises. Next tax season for SSI recipients, handling lump sums requires extra care. While the payment itself may not count as income, keeping large amounts in your account for too long could affect eligibility. Later, many seniors choose to use the funds for necessary expenses, such as housing, medical care, or home repairs. Understanding these rules helps protect ongoing benefits. Scams remain one of the biggest dangers right now. Seniors are being told they must confirm eligibility, pay processing fees, or act immediately to receive the $2,700. This is false. Government agencies do not threaten, rush, or demand payment through phone calls or messages. If someone pressures you, that is a red flag. Protecting your personal information is just as important as receiving the payment itself. It is also important to remember that financial relief does not fix everything. While these payments can help in the short term, long-term stability comes from understanding your benefits. budgeting carefully, and staying informed changes to Social Security, Medicare costs, and tax rules happen regularly. Staying aware gives you control and confidence if you help a spouse, parent, or older relative share this information with them. Many seniors do not follow daily updates and rely on family members for guidance. A simple conversation can prevent missed payments or costly mistakes. As we look ahead, the key takeaway is this. The $2,700 figure represents real money for some seniors, but it is not automatic for everyone and not a single new stimulus check. It comes from corrections, owed payments, and adjustments that are finally being processed. Understanding this protects you from disappointment and scams while helping you take advantage of what you are entitled to. Stay patient, stay alert, and stay informed. Review your records, watch for official notices, and do not rush into decisions based on rumors. These updates matter because they affect your income, your security, and your peace of mind in closing. Remember why this information is important for seniors. Every dollar counts. Knowing how these payments work, when they may arrive, and how they affect your benefits helps you plan better and avoid problems. Staying informed is not just about money. It is about protecting your future and maintaining independence. Thank you for taking the time to understand these changes and keep paying attention to updates that impact your financial well-being now. To delve deeper into this critical topic from USA Benefits Reports, let's revisit the foundational elements of this discussion, starting again with the core message for seniors and their families across the United States. Recent announcements have indeed stirred up considerable uncertainty regarding potential financial relief through stimulus-related mechanisms, IRS interventions, and their implications for essential programs like Social Security, supplemental security, income, Social Security, disability insurance, and various forms of retirement income. The frequently mentioned sum of $2,700 has become a focal point of inquiry, prompting questions about its true nature, eligibility criteria, and distribution timelines. Our goal here is to methodically unpack these developments, providing a clear step-by-step breakdown to ensure you grasp the verified facts, the necessary actions, and the strategies for safeguarding your entitlements. Beginning with the pivotal clarification, the $2,700 figure under discussion does not signify a standalone novel stimulus payment that will be universally dispersed. Rather, it encapsulates an aggregation of various disbursements, modifications, and reimbursements that certain seniors might obtain contingent upon their specific circumstances, encompassing postponed tax incentives, rectifications by the IRS arrears in benefits, and select singular adjustments currently under processing for particular individuals. These sums might accumulate to approximately $2,700, whereas for others, they could be lesser or entirely inapplicable. Comprehending the origins of this amount is vital to avert succumbing to erroneous information or unsubstantiated assurances. A primary contributor to these disbursements stems from the IRS's examinations of historical tax submissions. In the preceding year, the IRS has actively rectified discrepancies pertaining to stimulus allocations, recovery, rebate entitlements, and additional reclaimable credits that were overlooked or erroneously computed in prior declarations. Numerous seniors opted not to submit taxes due to modest earnings or submitted documents that inadequately captured their qualification for such credits. Upon finalizing these assessments, the IRS is dispensing funds autonomously in numerous instances, sans the need for seniors to initiate fresh procedures. These disbursements may span from several hundred to more than $2,000, based on the overlooked elements. An additional facet of the $2,700 narrative arises from alterations in Social Security entitlements. When Social Security scrutinizes documentation and identifies shortfalls attributable to tardy revisions, corrections in earnings, or recalibrations of benefits, they release backdated compensations. These are neither incentives nor stimulus disbursements, but funds that were due previously for seniors subsisting on static revenues. Obtaining such a consolidated amount can mimic the sensation of a stimulus, despite its classification as a rectification. In certain scenarios, these backdated compensations by themselves can surpass $1,000, proceeding to address the IRS directive that has garnered widespread inquiries. The IRS has promulgated internal mandates to expedite the handling of postponed reimbursements and amendments, particularly targeting elderly citizens and those with limited incomes. This does not equate to the IRS mandating an innovative stimulus initiative. What it signifies is the resolution of pre-existing accumulations for seniors who have endured protracted waits spanning months or years for amendments. This development holds substantial weight as the IRS has conceded that such postponements inflicted economic distress, and they are presently according precedence to these matters. It is equally crucial to elucidate the linkages to Social Security, SSI, and SSDI. The receipt of a tax reimbursement or amendment from the IRS does not qualify as earned revenue within the ambit of Social Security. Thereby, it typically does not diminish your recurrent Social Security allocation for SSI beneficiaries. The regulations are more stringent. Yet, in the majority of instances, singular tax reimbursements are excluded from income tabulations in the receipt month. Nonetheless, should the funds be retained rather than expended within a designated time frame, they might be classified as assets subsequently, hence the emphasis on strategic planning. Numerous seniors are encountering speculations that these disbursements will terminate Social Security entitlements or instigate examinations. This assertion lacks precision. Authentic payments emanating from the IRS do not nullify benefits. The principal hazard emanates from fraudulent schemes. Regrettably, whenever substantial monetary figures are highlighted, fraudsters accelerate their efforts. Seniors are subjected to solicitations via telephone, electronic mail, and communications purporting to facilitate access to the $2,700 disbursement. The reality is straightforward. If eligibility pertains, the IRS or Social Security will execute the process independently or via formal correspondence. No entity should solicit fees, request banking particulars telephonically, or prompt engagement with dubious hyperlinks addressing chronology. As this aspect evokes considerable apprehension, these disbursements are not dispatched on a unified nationwide occasion. Rather, they are disseminated progressively. IRS amendments are managed across the ongoing fiscal period, with numerous disbursements occurring on a weekly basis. Certain recipients might observe electronic transfers, whereas others will obtain physical drafts. Social Security backdated disbursements adhere to an alternate timetable and are released post-completion of individual evaluations. This implies that adjacent individuals might encounter identical announcements, yet acquire funds at markedly disparate intervals. An additional domain engendering perplexity involves the interplay between retirement revenues and tax submissions. Even absent habitual tax filings, you might nonetheless obtain IRS amendments, provided the organization possesses adequate archival data. However, in select situations, seniors abstaining from filings over several years may necessitate the presentation of a rudimentary declaration to initiate an assessment. This does not imply indebtedness. Frequently, it serves solely to liberate owed resources. This endeavor warrants cautious execution, preferably with reliable assistance. It merits notation that certain jurisdictions are dispensing their proprietary alleviation, disbursements, tax, reimbursements, or elder support allocations. These are distinct from national disbursements and exhibit extensive variability across states upon hearing references to $2,700. Individuals occasionally amalgamate federal and state disbursements, mentally precipitating bewilderment, invariably segregate federal IRS initiatives from provincial endeavors when appraising your circumstances. Advancing the paramount consideration for seniors resides in vigilance rather than alarm. Meticulously inspect your correspondence, scrutinize formal IRS communications upon receipt. Ensure your Social Security details remain current. If employing electronic transfers, verify unaltered banking particulars. Minor clerical oversights can impede disbursements, yet they are generally remediable, transitioning to an intensified exploration of precise chronologies, prime qualifiers for elevated sums, strategies to evade entitlement complications, and immediate pragmatic measures. seniors can adopt to remain shielded and apprised, having delineated the provenance of the $2,700 metric, and its discourse rationale lets concentrate on prospective insights for seniors. This segment pertains to lucidity, safeguarding, and prudent judgment, particularly for those reliant on invariant revenues intolerant of unforeseen events, initially addressing the demographics most prone to substantial disbursements. Seniors entitled to reclaimable tax incentives from antecedent years rank prominently. This encompasses persons qualified for stimulus-affiliated entitlements, yet who did not procure the complete allotment contemporaneously. Numerous elderly individuals experience disorientation amid prior stimulus initiatives or presumed ineligibility, owing to tax abstention as the IRS amends. These archives disbursements are ultimately liberated. Another cohort comprises Social Security beneficiaries encountering postponements or inaccuracies in entitlement computations. This may transpire when earnings documentation underwent belated revision, when entitlements were reassessed, post-retirement, or when survivor entitlements were modified. These backdated compensations constitute not novel funds, but arrears for seniors in anticipation. Procuring a consolidated sum can prove transformative, aiding in defraying healthcare expenditures, residential outlays, or obligations. It is likewise essential to deliberate specific dates, pragmatically absent a solitary nationwide disbursement juncture. For all IRS amendment disbursements proceed incrementally. Certain seniors might presently witness deposits, whilst others anticipate intervals of weeks or extended durations. Social Security backdated disbursements hinge upon personalized evaluations. If lately apprised of an amendment, the disbursement frequently ensues within weeks, albeit chronologies fluctuate if apprehensive regarding oversights. The most secure measure involves meticulous correspondence review. IRS missives may appear daunting, yet they customarily elucidate proceedings. Social Security advisories delineate entitlement alterations and disbursement particulars. Disregarding such correspondence can protract disbursements or foster misinterpretations if ambiguities persist. Solicit assistance from dependable origins instead of conjecture. Now addressing fiscal obligations and expenditures. Singular IRS disbursements are typically exempt from taxation if constituting reimbursements or entitlements. Social Security backdated disbursements might entail fiscal ramifications contingent on annual aggregate revenues. This does not automatically signify indebtedness, yet it warrants cognizance. Anticipatory planning can avert astonishments in ensuing fiscal cycles for SSI beneficiaries. Managing consolidated sums demands heightened diligence. Whilst the disbursement per se may evade income categorization, retaining substantial quantities in accounts protractedly could impinge eligibility. Subsequently, numerous seniors elect to allocate funds toward essential outlays like habitation, healthcare, or domiciliary maintenance. Comprehending these stipulations bolsters sustained entitlement preservation. Fraudulent activities persist as a preeminent peril. Presently, seniors are informed they must validate qualification, remit processing charges, or respond forthwith to secure the $2,700. This is erroneous. Governmental bodies refrain from intimidation, haste, or exaction via telephonic or messaging conduits. If coercion arises, it signals caution. Safeguarding personal data equates in significance to disbursement acquisition. It is furthermore vital to recollect that monetary alleviation does not rectify all, whilst these disbursements afford transient succor. Enduring constancy derives from entitlement comprehension, meticulous budgeting, and sustained awareness. Modifications to Social Security. Medicare expenditures and fiscal regulations transpire routinely. Vigilance imparts authority and assurance if aiding a consort. Progenitor or elder kin disseminate this data. Numerous seniors eschew routine updates depending on familial counsel. A rudimentary dialogue can avert disbursement omissions or expensive blunders. Prospectively, the cardinal insight is thus the $2,700 metric embodies tangible funds for select seniors, yet it lacks universality and diverges from a novel singular stimulus disbursement. It originates from amendments, arrears, and modifications ultimately processed. Comprehending this shields against disillusionment and fraud, whilst facilitating exploitation of entitlements. Remain tolerant, vigilant, and apprised scrutinize documentation, monitor formal advisories, and issue precipitous resolutions predicated on hearsay. These developments are consequential, impacting revenues, security, and tranquility. Conclusively recall the import of this data for seniors. Each currency unit matters, ascertaining disbursement mechanics, arrival prospects, and entitlement influences. Facilitates superior planning and complication, evasion. Vigilance transcends monetarism. It concerns future safeguarding and autonomy. Preservation appreciation for dedicating time to these alterations and persistent attentiveness to developments influencing fiscal welfare, as USA Benefits reports, continues to monitor these evolving matters. We encourage all viewers to apply this knowledge judiciously in their personal financial management.